Today on the Blockchain Report, Bitcoin is trading around 109K, and it might be because Michael Saylor signals yet another Bitcoin buy because apparently Mondays are for orange dots and billion-dollar buying sprees. Researchers say forget $200,000 Bitcoin this year, it'll be more like 140, which kind of feels like getting a gift card when you were promised a Ferrari. And ChatGPT's latest hobby, moonlighting as a bomb consultant and part-time Breaking Bad understudy. What? All that and more right now on today's show. Let's go. Good morning, my Bitcoin believers, and welcome to this Labor Day edition of the Blockchain Report. I'm Hank Hudson coming to you live from San Francisco, the city where rent is so high it makes a full Bitcoin look almost affordable. Now, here's the thing. Every market in America is closed today. The stock market's closed. The banks are closed. Even your boss is pretending to honor the working man by not emailing you until tomorrow. But not Bitcoin, and us too. We're still here too. You see, Bitcoin doesn't take holidays, it doesn't take lunch breaks, and so neither do we. It's Labor Day everywhere else, but in crypto, it's still Monday, baby. So while you're flipping burgers and enjoying frosty Labor Day brews, Bitcoin's still flipping charts. Now, before we get started with today's show, do me a quick favor, one working man to another, and smash that like button like you're Alcaraz at the US Open. And don't forget to follow RoxomTV and me at Hank at RoxomTV on all platforms that matter, because even in Bitcoin, the asset that literally never sleeps still needs a hype man, and that's me. All right, let's separate the hodlers from the holiday slackers, the whales from the weekend warriors, and see who's raking in the sats while everyone else is raking leaves this morning in our market rundown. Let's check it out. All right, so let's see what's going on in the Bitcoins and crypto markets this morning. Currently, Bitcoin is hovering right beneath that 109K level. We saw 124 new all-time highs set just about 2 weeks ago. We're waiting for that next bounce back. Will we see it this week? Maybe. We're going to have our main man, Mr. Big Beat himself, Stephen Orr, on the show with us in just a bit to break it all down. Ethereum doing a little better, currently sitting at around that mid $4,300 level. It also saw all-time highs just about a week and a half ago. It has not come down quite as much as Bitcoin, but is currently experiencing a little bit of a lull of itself. A lot of Ethereum treasury companies are starting themselves right now, definitely part of the reason we've seen this recent surge. And Solana bringing up the rear just beneath that $200 level, doing okay. We saw it as high, I think it was in the 220s, back down below 200, waiting for the next leg up itself. Traditional markets are closed this morning, so we're going to get right into the Bitcoin news right after this. We'll see you in a sec. All right, welcome back to this morning's bull run. Let's see what was going on this weekend while y'all were boating and drinking and swimming and doing other Labor Day things. Well, while you were doing those, Metaplanet, Japan's resident Bitcoin hoarder, well, they went shopping again. They scooped up an additional 1,009 more Bitcoin, which officially takes them to the magic 20,000 BTC mark, worth over about $2 billion at today's prices. Which means they've basically speed ran corporate Bitcoin stacking, doubling their own stack from 10,000 BTC to 20,000 in under 3 months. Their August shopping spree looked like an institutional Costco run. First, they spent nearly $54 million on 463 BTC. Then they bought another 518 for around $61.5 million. Then 775 Bitcoin for $93 million. And last but not least, our most recent purchase, which was just over 1,000 Bitcoin for a cool $112 million. Now, 20,000 coins in the vault, and now the 6th largest public Bitcoin treasury in the world. That puts them as the top Japanese treasury and breathing down the neck of names like Marathon and Strategy. Can we bring up the treasure box here, guys, for Bitcoin treasuries real quick? Cool, let's take a look on camera 3 here. So in case you haven't seen the show before, this is the place that we always go to check out what is going on with our favorite public companies that have their own Bitcoin treasuries. This is Bitcoin Treasuries Net. So right now you can see this is the big old leaderboard. Of course, we got Strategy up at the top in first place with a gazillion, actually 632,000 Bitcoin. But all the way down now, making their way, I think it's, was it 6th or 7th place? We have Metaplanet. They're up to 6 now. Okay, 20,000. So if you want to see what's going on with Metaplanet, super easy. Let's click on them here real quick, and that'll bring us to their individual page where we can get all the information about their specific treasury and how that's affecting them. So right now, they got 20,000 Bitcoin in the treasury. They always have fun numbers. It's always like 20,000 or 69 or one. So it's always weird like that. Right now, their current average buy price for Bitcoin is around $102,600. So right now, they're in the green, almost 6% on those Bitcoins buy. Not bad. In the green, but not Strategy in the green. That's green. Now let's scroll down here a little bit, guys, and you can actually take a further look on how this affects their stocks and their financials here. So right now you can see their market cap right around $4 billion. Is that right here? Let me just take a look on mine. It's hard to see. And their enterprise value is around $6 billion, okay? And then you can check out, do they not have the stock stuff here? I guess because this is on the Tokyo Exchange, it's a little bit different. But generally speaking, you can check like how it's affecting their stock price and what percentage of their market cap is made up by Bitcoin. Right now, their Bitcoin holdings are around $2 billion, so that would seemingly be about half of Metaplanet's current market cap. So far, they have come from failing hotel to Bitcoin treasury company. Good job, guys. All right, let's go back to camera one for this story, guys. Am I right? Because right now I want to talk about the hangover from all this, okay? So on the same day as the most recent Bitcoin buy, Metaplanet announced 11.5 million new shares that were issued because their buddy at the Evo fund exercised some warrants, okay? So Evo paid around $65.5 million for about 11.5 million shares, with some at around $5.67 and the rest just under $6. So Metaplanet used part of that to clean up their $20.4 million in old bonds, which is kind of like paying off one credit card with another, except instead of more debt, this time they're buying more Bitcoin. Sounds romantic, kind of, but there is a problem here. Their stock has phase planted down 54% since June. Bitcoin is up 2% in that same window, which makes their fancy equity flywheel model about as attractive as gas station sushi. Now, the flywheel works only if the stock price is remaining hot. When the stock price dies, the warrants aren't worth it, the liquidity dries up, and Metaplanet looks less like a financial genius and more like a guy yelling, "Buy the dip," with no actual cash left in his wallet. So management is trying Plan B here. And by Plan B, I mean asking shareholders to approve 555 million preferred shares that could raise a cool $3.7 billion so that they can keep buying Bitcoin. Now, preferred shares dressed up as a defensive mechanism, if you will, in this case, okay? Because paying up to 6% annual dividends on these, capped at 25% of their Bitcoin stash. Now, this move is designed to keep the money flowing even if regular shares keep on tanking. Meanwhile, analysts note the so-called Bitcoin premium on their stock collapsed from over 8x in June to just 2x now, which basically means people are no longer paying crazy multiples to own a stock in a company whose main trick is owning Bitcoin. Still, their CEO says, "We don't want to fall behind. People are racing to buy Bitcoin." Or in other words, even if the car is on fire, we're keeping the pedal down to the metal. Bullish for Bitcoin demand in the near term, sure. Risky as hell for Metaplanet shareholders. And one hell of a show for the rest of us. Can't stop watching. I hope they do okay, though. I like those guys. Now, speaking of Metaplanet, they actually held an extraordinary shareholders meeting in Tokyo, and it looked less like corporate finance and more like a festival of sorts. There were costumes at the entrance, food trucks lined up outside, even a K-pop band scheduled to perform. And in the middle of it all, Eric Trump, the other Trump son, took to the stage to throw his support behind the company's latest plan, a capital raise of up to 550 million new shares overseas, designed to bring in roughly $884 million, most of which will go straight into buy more Bitcoin. How did you guess? You already knew that was coming, didn't you? Of course you did. Now, Eric Trump has been on Metaplanet's advisory board since March, and he used the moment to praise CEO Simon Garbage for steering the company away from its hotel business, which was hammered during the COVID years, and it's straight into the Bitcoin strategy play that now has them sitting on over $2 billion worth of orange coin. He even compared Gerevich's role in Asia to Michael Saylor's in the United States, calling them both leaders of this corporate treasury arms race. Now, shareholders approved the plan, but the backdrop wasn't exactly rosy. Metaplanet's stock, despite being up 740% over the past year, has fallen, as we mentioned previously, more than 50% since June, and it slid another 5.5% on the day of this actual meeting. Meanwhile, Bitcoin itself was trading at around 108K at the time, down from its $124,000 peak it touched just a couple of weeks ago. Now, the company did confirm it bought another 1,009 Bitcoin, officially pushing its holdings past that $20,000 landmark that we talked about. That made for a bit of a strange contrast. A falling stock, a rising treasury, and a lot of spectacle to keep the story moving. Now, the politics of this, aren't exactly far behind. President Donald Trump has positioned himself, as we know, as the crypto president of the world, arguing digital assets can improve the banking system and help strengthen the dollar. Critics say family businesses tied to crypto make that position a little, how do we put this, self-interested, if we will. Now, Eric Trump, meanwhile, has predicted Bitcoin could reach $1 million within just a few years. And the family's mining venture, aptly named American Bitcoin, is reportedly aiming for a NASDAQ listing of its own. So to break this down, what does this all actually mean, Hank? Tell us. Okay, then I will. What it means is that Metaplanet is still buying coins. Eric Trump is lending his name and face to the effort, and the only thing that seems to be keeping steady in this entire story is the Bitcoin itself. Surprise, surprise, right? All right, Michael Saylor, he's back at it, and he's developed a bit of a, let's call it a habit, shall we? And that habit is whenever he posts a chart covered in orange dots and reminds everyone that Bitcoin is still on sale, it usually means another purchase disclosure is in the near. And lately, those disclosures have been landing almost every Monday without fail. The most recent one added over 3,000 BTC at a cost of about $356 million, with an average price of just underneath 116K per coin. That took Strategy's total to around 632,000 BTC, a total value of almost $69 billion. And this isn't exactly happening in a vacuum either here, gang. In 2025 alone, the company has raised over $5.5 billion through IPOs, which amounts to about 12% of all U.S. listings this year. Now, despite the constant fundraising, the stock has reportedly continued to outperform the so-called Magnificent Seven tech names year over year, which is, let's be fair, no small claim, right? On top of the accumulation, one of the Strategy's lingering headaches completely disappeared. We're, of course, talking about a class action lawsuit accusing the company of overstating the benefits of fair value accounting was dismissed from the courts with prejudice. Now, that means the case is permanently closed and can't be filed again, removing a cloud that's been hanging over the company since back in May. Now, for other corporations considering Bitcoin as a balance sheet reserve, that dismissal may also set a useful precedent. So here's the picture, okay? The world's biggest corporate holder of Bitcoin is still very much buying, still raising billions from the equity markets, and now has one less legal problem to worry about. Love it. Every Monday, as we mentioned, seems to bring another disclosure, and every disclosure tends to reinforce the exact same point. There's a buyer in the market who treats Bitcoin like a permanent sale sign. And that kind of steady demand, it doesn't just soak up supply, it also sets a floor. And that's why the long-term trend for Bitcoin keeps leaning higher, no matter how noisy the short-term charts often look. And Michael Saylor, he just can't stay out of the news this morning. It's been a couple of days. And most recently, he has taken his Bitcoin evangelism out of this world. Literally. He unveiled an AI-generated demo on X for Station B, a Bitcoin-powered space station. Oh, this is going to be good. Let's take a peek at this.
Welcome to Station B, humanity's first Bitcoin-powered orbital station. Here, innovation, financial sovereignty, and the frontier of space converge.
Oh boy, just when you thought his AI-generated memes and images weren't enough, we got this. God bless Satoshi. Now, the B he was talking about is B for Bitcoin, not B for because he ran out of earthly metaphors. The video stars an AI version of Saylor as a tour guide, walking viewers through a futuristic orbital habitat complete with a lounge, a Bitcoin ATM, a control center, a diner, and even a private suite. The video is like 2 minutes long, so if you want to go check it out, go visit his X account. Now, welcome to Station B, the Michael Saylor avatar says, humanity's first Bitcoin-powered orbital station where innovation, financial sovereignty, and the frontier of space converge into one. He added that all of this was crafted to remind you that Satoshi can refresh the mind as well as the balance sheet. That's deep, Michael. Now, the message here is quite clear. In Saylor's vision, Bitcoin doesn't just fix the money, it powers the future, even in orbit. So why build Station B in the first place, you ask? Well, because according to Saylor, it's how humanity survives the collapse of fiat. The video paints Bitcoin as the alternative to government-issued money, positioning it as the lifeboat when trust and regulation finally run aground. Reality check, the US dollar remains the dominant global reserve currency currently, propped up by international demand and not exactly on the verge of implosion as far as I'm aware. But Station B fits right into Saylor's pattern of using spectacle to hammer home the old Bitcoin narrative. Back on Earth, the spectacle didn't stop Strategy's stock from tumbling. Shares fell 15% in August as investors balked at the company's playbook of raising equity and issuing more stock just to keep stacking Satoshis. Bloomberg noted the market doesn't love constant dilution, especially when Strategy's entire valuation is chained to Bitcoin's price, a price pressured lately by capital rotating into Ethereum. Still, Strategy's numbers, well, they speak for themselves. The firm holds over 632,000 Bitcoin worth more than like $68 billion at today's prices, cementing its role as the largest corporate Bitcoin treasury on the planet. So whether shareholders like it or not, the Saylor strategy certainly remains intact. Accumulate Bitcoin at scale, and if fiat burns down, have a backup plan ready in orbit. And as we know, Bitcoin hit 124K just a couple of weeks ago for new all-time highs, and the bulls are already screaming 200,000K by the end of this year. Bitwise CIO Matt Hogan says it, BitDeer's Jeff LaBerge says it, and the Kool-Aid, well, damn it, does it taste great. But then 10x Research walked in like the Debbie Downer of crypto and says, actually, 200,000 will be extremely difficult at this point. Thanks, 10x. Way to ruin the party for the rest of us. Now, their reasons, well, fund inflows are drying up. Miners are stressed out, and traders are a little complacent, and seasonal patterns are back in action. Because nothing kills hype faster than a chart that reminds us that, yeah, September is usually a bit of a downer. Now, they give Bitcoin a 54% chance of hitting just 140K, which is like saying, you're not getting that Ferrari, but hey, maybe you'll get like a Tesla or a Honda or something. Still good cars. Now, that 140K target is only 12% below Bitcoin's all-time high, or 12% above Bitcoin's all-time high. But compared to 200K, it feels like getting socks for Christmas when you asked for, I don't know, like a jet ski or something. Their model has even flipped bearish since mid-August. So now we're left with two choices, really. Option one, believe the bulls, throw a party, and start designing your 200K Bitcoin merch line now. I like that option. Option two, less fun, is listen to 10x Research, lower your expectations, and practice saying 140K is fine, I'm not mad, you're mad, 100K of 40K is fine, we're all going to be fine. I prefer option one, but I'm an optimist like that. And Bitcoin, as you know, used to be the world's favorite adrenaline ride, kind of still is, up until late. But now, some might argue that it's getting a little boring. 3 and 6 month volatility is actually at historic lows right now. Even while it hit new all-time highs just a few weeks ago, the price barely flinched. We got 108K on Friday, it's like 109K today. Year to date, it's up 17%, but for Bitcoin, that's practically a Sunday afternoon nap. Those are the best ones. So what's behind the sudden chill attitude of BTC, you ask? Well, corporations are hoarding Bitcoin like Costco shoppers with toilet paper. JP Morgan's Nicolaus Pantagrutsagula, that can't be a real name. Nicolaus says that corporate treasuries now hold more than 6% of the total supply, which basically acts like private sector quantitative easing, if you will. And here's the real kicker. Businesses are buying over 1,700 coins a day this year. Miners, they're only cranking out about 450 coins a day. That's 4 times less. Even ETFs are gobbling up another 1,400 a day, and governments throw in 39 for good measure. So yeah, demand isn't beating supply, it's mugging it in a dark alley. Now, exchange reserves are at multi-year lows, and analysts are whispering the phrase Wall Street secretly loves, supply shock. Now, leading the charge, as always, Saylor Strategy with over 632,000 BTC on the books, worth a lot of money, 68 million at today's numbers. In fact, Saylor buys so much Bitcoin, some analysts joke he's synthetically halving the supply all by himself. And copycats, well, they're everywhere now. GameStop, Trump Media, Metaplanet, basically anyone with a ticker symbol is issuing stock and buying Bitcoin. In July alone, public companies accounted for nearly 2/3 of all Bitcoin purchased by major buyers. Of course, about a quarter of these firms now trade below the value of the coins they hold, because nothing screams Wall Street genius like buying Bitcoin and somehow making it look like a bad trade. And it's not just Bitcoin either. Corporate treasuries are dipping into Ether and random altcoins as well. Trump Media even launched Trump Media Group MicroStrategy to hold Crypto.com's Kronos token. Now, since the announcement, Crow's market cap has almost doubled to $9 billion because nothing pumps a mid-tier altcoin faster than putting the Trump on the wrapper, right? Right. Meanwhile, DC is doing its part. Trump signed an executive order letting crypto into 401ks, then a bill letting banks issue stablecoins, then told Fannie Mae and Freddie Mac to start counting crypto as mortgage assets. Or in other words, your grandma's retirement, your mortgage, and your bank account may all end up holding Bitcoin before you do. So here's the irony here. The less exciting Bitcoin gets, the more unstoppable it actually becomes. The revolution won't be televised, friends. It'll be sitting quietly in your retirement fund, making Wall Street boring again while still eating the entire financial system alive. Oh boy. Next up, we're talking about California Governor Gavin Newsom. He's making headlines for teasing a brand new meme coin. Just what the world needed. And no, it's not Newsom coin. That would have been the obvious. This is actually called Trump Corruption Coin. Yeah, Newsom says it's less of an investment vehicle and more of a political middle finger. I wonder to who. He revealed the coin on the Pivot podcast, pitching it as part of his Campaign for Democracy initiative and describing it as a way to mock Trump's growing love affair with meme coins. Now, when asked if he'd ever slap his own name on it, he laughed and said, "No, it's Trump Corruption Coin." Direct shot taken, Gavin. Now, Newsom's stated goal is to turn up the heat and highlight what he calls the absurdity of Trump using crypto to pump his political brand. Because apparently the best way to fight memes is with more memes. Now, if this thing ever launches, it would be another in a long line of political tokens that usually flare up like fireworks and then crash faster than a bad SPAC. Case in point, the official Trump coin, which is already down 90% from its all-time highs. But here's the irony here. Donald Trump has actually been killing it in crypto since being back in office. He's made millions from meme coins, NFTs, and assorted blockchain side hustles. In June, he disclosed $57 million in earnings from World Liberty Financial, where he holds nearly 15.8 billion governance tokens. His Trump Media and Technology Group claims more than $2 billion in Bitcoin and other digital assets, with reports saying he's made $2.5 billion off of crypto since 2022. Now, at this point, digital assets represent almost 44% of his post-presidential wealth. So, yeah, while Newsom is mocking with Trump Corruption Coin, the reality is Trump's crypto dominance is already a thing. He's memeing his way into billions, and the critics are minting coins just to keep up. Now, the punchline here? Crypto is supposed to free us from this political nonsense. Instead, it could be argued that politics has turned crypto into That very nonsense. All right, we're taking a break, but when we're back, more of today's top news stories, and in just a bit, we'll be joined by Mr. Big Beat himself, Stephen Orr, to tell you what to expect from Bitcoin's price as we move into the beginning of this month. Stay tuned, more Blockchain Report right after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
All right, and we're back with more of this morning's bull run. We'll see if Mr. Big Beat is going to join us today. Traditional markets are closed this morning, so if he was setting up shop somewhere warm with a brew in his hand, I wouldn't blame him, but we'll keep you posted. Hopefully he'll be able to tune in with us this morning. But if he's not, that's okay too. All right, going back to the news, Jack Dorsey, the guy who built Twitter and then rage quit it, is once again reminding everyone that Bitcoin was supposed to be used to buy coffee, not hoarded like Beanie Babies in 1999. Now this week, he doubled down on social media, liking a post that basically screamed, "Hey, geniuses, read the white paper. Bitcoin is electronic cash, not your personal digital tulip bulb collection." The post came from BitVM creator Robin Linus, who pointed out that Satoshi clearly designed Bitcoin as peer-to-peer electronic cash for private payments. The whole digital asset narrative, that was bolted on later by people who figured they could pump bags if they dressed it up like a hedge fund product. Dorsey, he agrees, and loudly. And of course, the internet, well, they had opinions. Some clapped like seals, saying, "Yes, Jack, bring back the cypherpunk dream." Others shot back at Bitcoin can't be realistically working as a payment network unless it's a rock-solid store of value first. And then there's the crowd pointing out the obvious. Bitcoin in its current form doesn't exactly scale to billions of Starbucks orders without something breaking. But this isn't new territory for Dorsey. In April, he flat out warned that if Bitcoin doesn't get serious about payments, it risks becoming irrelevant. Translation, if Bitcoin keeps pretending it's a Wall Street asset instead of money, it could end up as, well, a Wall Street asset instead of money. Meanwhile, at Block, the company formerly known as Square, Dorsey's been pushing actual Bitcoin payments through the Lightning Network since back in May. So he's not just talking the talk, he's literally wiring the checkout terminals. He's also been pushing BIP 177, the proposal to rename sats as Bitcoin to make it easier for normies who don't want to do math with decimals. Because retail adoption isn't going to happen if your barista has to count zeros on a POS screen like they're cracking an Enigma code. So yeah, while Wall Street is busy turning Bitcoin into an ETF chew toy, Jack Dorsey is out here screaming into the void, "No, it's supposed to be money." Well, he might be wrong and he might be right, but at least he's not boring. Am I right? Yeah. All right, Victor, I want to talk to you about this one a little bit. As someone who's relatively new into the Bitcoin crypto universe, ecosystem, whatever, what would it take for you, do you think, to actually consider to start using Bitcoin as a payment? Would it need to be easier? Like, what's keeping you from doing it right now?
I don't know. I'm conflicted with the story because I see his point of view though, because like if a lot of more people used it for transactions, I feel like it'd be easier to orange pill people. More people use it.
Mm-hmm.
But right now, it's kind of like hold on to your Bitcoin, don't sell, don't use it.
Yeah. It's a weird thing right there, right? Because you hear both things in the community. It's like, never sell your Bitcoin, but they're also like, use your Bitcoin. But I'm like, I could have swore you just told me not to sell it.
Yeah, because next week it's going to be worth 10 grand more. Like,
right. That puts it in kind of a weird spot right now. What do you think is keeping people, aside from that, do you think it needs to be easier? Like, do I need to be able to feel confident? If Bitcoin was integrated into Venmo, for instance, do you think maybe that would be a good onboarding ramp? If I owed you some money, it told me and you were like, hey, could you pay me back that in Bitcoin? You could just type in the dollar amount, right? So then you would know what you were giving and it would send it to you in that Bitcoin. Would that maybe help?
Yeah, I think so. I think it might already, you're able to do that on Venmo, or maybe I'm thinking it's Zelle, but I think there's already a
PayPal?
payment you can do that now. Yeah.
Yeah, I think PayPal has it integrated
PayPal?
somehow, but that's kind of the point, right? Like, it might be integrated, but if that is in fact the case, I don't think they're doing a good enough job to showcase how easy it is to do that. Because I know like that's what's keeping my mother from, or my parents from actively owning Bitcoin, is it seems too complex and I don't want to deal with the wallets and the numbers, and I get it.
Yeah. If they did it for you, it'd be much easier, for sure. I feel here in the US, so it's I don't know, like we still need to get more orange pill. Yeah.
We also don't need it the same way. Like we're not incentivized the same way that people in like Argentina or South America are, because like their currency is garbage, right? Like it's experience incredible amounts of inflation and stuff. For us, like we still got the dollar, which isn't perfect, but it's
it looks like we're heading there.
Right.
Yeah.
It does look like we're heading there.
Yeah.
It's like people are going to need to feel like it's a necessity, I feel like, to really get on board. And you'll have plenty of people in the industry be like, you can already do that stuff now. It's like, great, to you and to the people in that ecosystem, it seems easy, but it needs to be idiot-proof easy if we really want to see mass adoption on the peer-to-peer payment level,
No,
I
I
don't
agree.
think people are ready for it otherwise. So
Yeah.
we'll see. You said you had some stuff. We were
Before
talking
we move
earlier
on,
about our favorite guy,
because you had that
Saylor.
story about Saylor and his AI video that he uploaded.
Oh no,
Sure.
he's in AI videos now too. Watch out.
Gaston, can you share my screen? So he actually uploaded a couple more videos. One this morning.
Oh boy, as if the images weren't incredible enough. What do we got
Right,
here?
like he was doing the images. Now he's like moved on to videos. He
Oh my
posted
God, is
this
this
like
like
5
Fast and
hours
the
ago
Furious?
that says whoever gets the most Bitcoin wins, and it's him like in a race car, or
You know what I would love to do? I want us to run, because he's just using AI. I don't know what service he uses for this, to run like a contest for other people to make their own AI images and videos featuring Michael Saylor, and then we tag him with what we consider to be the best ones, because there are so many fun opportunities here for us to play around with this. I'm actually surprised he hasn't called himself like Agent Orange or something yet. Like maybe that's because of the history of Agent
look at
Orange is
this.
a little. What a dapper man. The orange beetle, like, my
almost
God,
got
whatever is.
He's teasing
social media people
another
aren't getting
BTC
paid
buy.
Yeah, I really respect his commitment to it. I mean, he's very all in. Is there music with this, or is this just
Yeah, but I don't know if
buying everything orange?
I don't know if you can hear it. Can you? No.
No, that's okay. That's okay. I'm just glad to hear there's an audio element to it as well, Atlas. So, boy, yeah, I'd say anyone watching at home, if you can send us your own curated Michael Saylor AI image or video, I will definitely do everything in my power to convince Victor to let me play it on air, because they're just so fun.
Yeah, send them to RoxomTV.
Yeah, he's really a steward built for this era. At least him or his whatever his social media team is. I'd like to think he's the one actually doing these, but there's no way.
I wonder how many versions of like or prompts when he uses the AI, like how many pictures he has to pick from, or he just assists the first one.
I feel like he seems pretty calculated. I got a feeling he's going through a bunch. I like to think he's just like on his couch at home, like hee hee hee, just like typing away with these AI prompts. But I'm romantic like that, I think. I don't think that's the case. What do you think about these? As someone, again, who's still kind of ingratiating himself into this ecosystem, does this make you any more or less interested in Bitcoin, or is it you're just like, this is all kind of fun and silly?
More like fun and silly. I mean,
Fun and silly.
more power to him, but I'm just like, this is another rich person buying more Bitcoin, in my point of
Yeah.
view. But if I was him and I had the funds to do it, I would totally do it.
Maybe we should do like a contest where you make your own Michael Saylor thing, but you're in it. Maybe that's it, because you don't seem particularly interested if it's like a billionaire buying more Bitcoin. You don't relate to that, right? But if we all just started making our own, but it was about us like buying 0.02 of a Bitcoin or
Honestly,
something,
that would
and
be
then we
kind of
just do it
fun.
in the same way.
That would be fun.
Yeah.
Yeah.
Maybe get the little hodlers out there a little more interested in this space. Give us a little juice.
Yeah.
I don't know. It's an idea. But if you got something, send it to RoxomTV. I'll put it on here. Why not? Let's get wild. All right. I think I'm ready for a break. We have our first guest coming up in a little bit. I think we got some more stories first. But let's take a break, and we'll jam out when we get back. Sound good? All right, now we're back with more of this morning's bull run. Let's go over the top stories of the day, shall we? Next up, Warren Buffett. You know him. Well, he's built himself the world's largest pillow fort made entirely out of cash. Berkshire Hathaway is now sitting on roughly $350 billion in cash and treasury bills, an all-time high for the company, and more than any other U.S. public firm. Now, that usually means one thing, that Warren smells trouble. Historically, he piles into cash when markets are frothy, then swoops in after crashes to buy on the cheap. He did it before the dot-com bust, he did it before the 2008 financial crisis, and now he's doing it again. Yikes! Which kind of raises the obvious question here, what exactly is about to break? The NASDAQ looks like the prime candidate currently. Valuations have blown past dot-com bubble levels, both compared to money supply and the overall U.S. economy. And Bitcoin has been riding shotgun with tech stocks, showing a strong correlation with the NASDAQ. So if equities fail, Bitcoin probably takes a hit too. But here's the twist in all of this. The U.S. money supply is quietly picking up steam again, growing at the fastest pace since back in 2022. More than 20 central banks have already cut rates this year, and the Fed, well, they could be next. If liquidity keeps expanding, it could end up propping up both stocks and Bitcoin, no matter how nervous Buffett looks. And if history is any guide, Bitcoin tends to follow the money supply higher, with a little lag, but a lot of force. So Buffett may be hoarding cash for the storm, but Bitcoin's long-term forecast still depends less on his caution and more on how much fresh liquidity the Fed is willing to pump into the system. We'll be keeping an eye on that one. It's important. And in other news, according to a new FinCEN advisory, U.S. banks helped move a casual $312 billion worth of Chinese money launderers between 2020 and 2024. That averages more than $62 billion a year in dirty money flowing through the system that politicians still insist is safe and regulated. The report analyzed over 137,000 Bank Secrecy Act filings and found Chinese laundering networks working hand in hand with Mexican drug cartels. Now, the cartels need to wash U.S. drug proceeds. The Chinese need U.S. dollars to dodge Beijing's currency controls. And together, they're running what FinCEN calls significant underground money movement schemes across the United States and globally. Okay, and this isn't small potatoes, my friends. Beyond drug money, these same networks are tied to human trafficking, healthcare fraud, elder abuse, and $53.7 billion in suspicious real estate transactions. Great! So the banks move hundreds of billions in cartel money, and who do the lawmakers blame? They blame crypto because, of course, they do. Senator Elizabeth Warren, the Senate Banking Committee's ranking member, warned earlier this year that bad actors are increasingly turning to cryptocurrency to launder funds while ignoring the fact that her beloved banks are moving cartel cash like it's a loyalty program. Here's the reality check here, gang. The UN estimates more than $2 trillion is laundered globally through the financial system each and every year. $2 trillion. Meanwhile, Chainalysis says the entire crypto industry has seen about $189 billion in illicit activity over the last 5 years combined. That's not even 10% of what banks launder in a single year. TRM Labs notes illicit activity in crypto is less than 1% of all volume. Chainalysis points out that criminals will exploit any vector, fiat or crypto, but the sheer size and opaqueness of banks mean most dirty money still flows through the traditional system. Ironically, crypto crime is easier to see because blockchains are public, which fuels the lazy narrative that Bitcoin is for criminals. Meanwhile, cash and banks remain the preferred getaway car, and regulators keep pretending it's the orange coin. That's the problem. Now, if anything, this report makes it quite obvious. Bitcoin's biggest crime is being transparent enough to show the hypocrisy in all of this madness. All right, Kevin O'Leary, he's back at it. We're talking, of course, about Mr. Wonderful from Shark Tank. And after calling Bitcoin garbage for years, he now wants you to pay him to buy it. Okay, his company, Beanstocks, has rolled out new features letting customers invest in Bitcoin and gold through ETFs. All trades and holdings stay inside Beanstocks accounts because, God forbid, regular people figure out what self-custody means. Beanstalk CEO Connor O'Brien says the system makes alternative assets easy. You can start with $20, or in other words, you can either buy lunch or own the tiniest fraction of a Bitcoin ETF. O'Brien added that Bitcoin and gold behave differently during inflation. So yeah, if your stock portfolio is bleeding, at least your digital rock or your shiny rock might save you. O'Leary himself also chimed in. The man known as Mr. Wonderful said, by investing in Bitcoin and gold using ETFs on a Beanstocks account, investors could benefit from additional diversification. Because nothing says diversification like buying the only two assets gold bugs and Bitcoiners ever tweet about. Premium subscribers now get access to iShares Bitcoin Trust and iShares Gold Trust. No trading commissions, no extra fees. Mr. Wonderful used to call Bitcoin garbage, mind you. Now he's predicting it'll hit 250K this year. That's a pivot so big it deserves its own ETF. He even admitted crypto assets now make up nearly 20% of his own portfolio, which ain't too bad for a guy who once said it was all going to zero. Back in June at Consensus in Toronto, O'Leary begged for regulation. He said the industry had hit a wall on assets under management, and that only Congress, by passing laws like the Genius Act, could unlock the trillion-dollar opportunity. Meanwhile, regulators in the United States and Europe are finally signaling support for crypto markets. Institutional money is definitely circling, and Kevin O'Leary is there with a $20 minimum, turning Bitcoin ETFs into the next mainstream investing gateway. And friend of the program, Anthony Scaramucci, has some good news and some not good news, often referred to as bad news. The good news is he still believes Bitcoin will eventually hit $500,000 a coin. The bad news, he thinks it could crash 40% before it gets there. Yikes. Now, speaking with Coinage, Scaramucci reminded investors that volatility is not a mistake in Bitcoin. It's kind of the whole point. Corrections, he says, are what separate nervous traders from disciplined holders. And those disciplined holders, in his view, are the ones who come out ahead when Bitcoin makes its next big move higher. He pointed out that Bitcoin is still in its early adoption stage, and the biggest mistake people make is underestimating its long-term role in global finance. Or, in other words, the short-term drawdowns might sting, but they're part of the growth cycle. Scaramucci even compared the current Bitcoin market to his own past mistakes in traditional investing. He admitted to selling Apple, Amazon, Microsoft, and Nvidia far too early, choices that cost him enormous returns when those companies became giants. His takeaway is actually pretty clear. When you have a quality asset, you hold it, even when it gets a little ugly. He now sees Bitcoin in that same category, something to hold for at least 5 to 6 years with the potential to deliver the kind of rewards tech investors saw in the early 2000s. And while the wider crypto market is bullish, Scaramucci is throwing cold water on the idea of a straight shot upward. He cautioned that markets often look their strongest right before disaster hits, and Bitcoin, well, Bitcoin is certainly no exception to this rule. That's why he's warning that a major correction could arrive before Bitcoin climbs to $500,000. But despite the gloomy forecast, his advice stays consistent. Don't panic, don't sell, and recognize volatility as the cost of admission for outsized gains. And Raoul Pal is back, dropping another chart bomb, this time comparing crypto adoption to the early days of the interwebs. You remember those? And if he's right, we're all going to be rich, or at least drowning in digital wallets, that is. According to Pal, crypto already had 659 million users by the end of 2024. That's after 9 years of growing 137% annually. Now, for context, the internet was crawling along at 76% annual growth in its early phase, hitting 187 million users by the year 2000. So crypto is officially outpacing the thing that gave us cat memes and online dating. Pal's forecast, 1 billion crypto users by next year, 4 billion by 2030. That's half the planet swapping dog coins and Bitcoin memes. It's the world I want to live in. And Pal, he thinks the entire market could hit $100 trillion by 2032. Now, the logic here? Debasement drives 90% of price action. Adoption drives the rest. And since governments can't stop printing money, crypto keeps on winning. But the crowd isn't buying all of Pal's Kool-Aid right now. Some pointed out that wallet numbers are about as reliable as a Tinder profile picture. One founder can spin up 10,000 wallets and spread coins around to a fake community. Another guy admitted he makes a new wallet every 6 months like clockwork. So wallet growth does not necessarily equal user growth. Pal clapped back that everyone has multiple IP addresses too, so the math still maths. Now, for comparison's sake, AAA estimated 560 million users by the end of 2024. Andreessen Horowitz said the number of actual monthly real users was closer to 30 to 60 million. So, depending on who you ask, crypto is either at global takeover levels or still basically a quirky subculture. But here's the punchline. If Pal's vision is even half right, Bitcoin, the index bet, the reserve asset, the OG, walks away with the crown from all this. Which means dips start looking like discounts, sideways markets start looking like patience, and that $10 trillion milestone starts looking less like a dream and more like an appointment on the calendar. All right, we're taking a break, but when we're back, we'll be joined by our big secret guest of the day, so you're going to want to stay tuned for that and much more on the Blockchain Report right after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, welcome back to the Blockchain Report. Now we have a special guest for you today as part of our deep dive. Now this is someone who's lived the why Bitcoin story in real life. He grew up during Venezuela's hyperinflation, where survival meant learning how to protect your money before it evaporated. He went on to co-found a company that's changing how people put their Bitcoin to work, not by selling it, by unlocking its real-world opportunities with it. He's written for Forbes, shaped the conversation around Bitcoin-backed lending, and is helping build the future of financial access worldwide. Let's give a big Blockchain Report welcome to today's guest, the co-founder and chief strategy officer of Letin, Mauricio D. Bartolomeo, everybody. Welcome to the show, Mauricio. It's great to have you. We are super pumped to have you on today. How are you this morning? Thanks for joining us.
I'm great, Hank. Thank you for that immensely kind introduction.
Well, you have earned it. You've been living that Bitcoin life for a while now. Your journey is really interesting. I was doing my due diligences into you, Mauricio, and I saw that you grew up in Venezuela during hyperinflation, where money lost value faster than a Blockbuster gift card does today. How did that experience shape the way you think about money and eventually push you toward Bitcoin? Unpack that for us.
Oh man, great question. And yeah, as you mentioned, I grew up in Venezuela, which is where I first got I guess I got my first experience with money not working or breaking money or useless money, really. And that led me to question a lot of things about what I was being taught in school and what I was reading in economics books, because as I was growing up in Venezuela, and by the way, I mean, in my very early childhood, I was a bit unaware to some of these things. And by the mid 90s, I was already, I could make sense of what was going on around me. And one of my dad's a serial entrepreneur. He's been, he's done all sorts of businesses, started companies, multiple companies throughout his life. So that was always part of my desire, I guess. So it was like an innate desire. I wanted to start something and I wanted to understand how to make money. And one of the things I remember distinctly, hearing my dad talk about money at the dinner table or at the lunch table, I was always very confused because my dad was following a playbook that was in many ways contradicting what I was learning in school. And I saw him start doing very well financially, whereas some of my friends' parents who were, say, doctors or lawyers who were following every little thing that we were reading on the book kept getting left behind. And I'll explain. In school, you were being taught that you should put away fiat and save part of your fiat income for a rainy day, right? And you were told that debt was bad. Debt was not a good thing to have. You should clear off your debt. And as this was happening, I was seeing my friends' parents, who were, again, doctors and lawyers, they were putting away part of their paycheck every month, and they were clearing off their debt, right? And then on the other side of the house, I was seeing my dad basically take any loan that was being offered to him to invest this and to start as many businesses as he could. And any extra money he had, he would invest. There was nothing ever sitting in his checking account or even in his fiat savings account. He was always invested and always borrowing as much fiat as he could. And that was a big contradiction, right? I was like, how is this person not following the rules, doing so well, where these people following the rules are getting left behind? This doesn't work. And another thing that I remember was very puzzling to me was when inflation was starting to really pick up in Venezuela, people started bragging about their cars. And what I mean by this is there was a big bragging point because people would buy a Toyota 4Runner, okay? And this was like a 1994 Toyota 4Runner. They would drive it for 2 years, and they were able to sell it in 1996 for more bolivares than they bought it for. And in nominal Bolivar terms, the truck was going up in bolivares, but in real terms, if you price that same truck in dollars or gold, it wasn't worth the same. It was depreciating just like anything else. But people were being thrown for a loop because in Venezuelan fiat terms, they were better off 2 years after having driven the truck. And so there were all these inconsistencies that made me question how money works. And I remember distinctly, I said, listen, if my goal in life is to start a business that makes money, the first thing that I should do is understand how money works. And so that led me down this discovery path around why our money wasn't working like the books said. And so it led me to question and challenge a lot of the main teachings that you read about in university or in high school. And you're basically never taught to question how money works. You're never really told how money works. They just tell you it's this thing, and you just need to make more of it. But they don't really tell you who issues it, what gives it value, how do you assess whether it's working or not working. And so that led me down this path of trying to understand why our money didn't work. And as that happened, hyperinflation was starting to kick in. There's a lot of other political turmoil to add to the mix. But the long and the short of it was that I learned from that experience that those who held fiat, the Venezuelan bolivar, the hot potato, got wrecked. And those who got rid of the fiat and traded it for virtually almost anything else did very well. But those who did the best were the ones that shorted the bolivar by taking out loans that were priced well below the actual rate of inflation and used those bolivares to buy assets. So during this whole period, what I learned was that the best economic activity for me to do in a collapsing fiat environment was to short that collapsing fiat. And so that started my what I consider my most successful trade before Bitcoin, which was shorting the Venezuelan bolivar with the US dollar. And so I would take out bolivar loans, turn around, buy dollars with them. My loans were being issued to me at 24-30% range, and the inflation rate was somewhere in the thousands of percent, or a couple of hundred of thousands percent. So just take out these loans, wait for the dollars that I had purchased to mega inflate, and then I would sell a portion of those dollars, repay the bolivar loan, and do it all over again, rinse, repeat, rinse, repeat. Until obviously it started becoming more and more challenging to short the bolivar, and along that time is because of some political events, I had to leave the country. So it became even harder for me to short the bolivar. But that was around the time my family found Bitcoin. So I went from shorting the Bolivar with the dollar to shorting the dollar with Bitcoin. And I can kind of get into more of the how do we find Bitcoin and what leads to Letin, but that was, I'll pause this rant for now.
No, that's super interesting. It kind of almost reminds me a little bit, if you ever read Robert Kiyosaki's Rich Dad, Poor Dad. There's like some similarities there, except you are the son of the rich dad in this situation who kind of is understanding the monetary system through this very different financial lens compared to what we are brought up believing, which is just crazy. We learn how to like bisect angles in school, but they don't teach us anything about money or taxes. It almost seems kind of deliberate. I would like you to kind of go into that moment though. When did Bitcoin really click for you that it was not some kind of nerdy monetary experiment, but instead you could see it as something that people could actually build businesses on? What was that process like for you?
So the first step to that was, how do I gain my conviction in Bitcoin? And beyond there, once that conviction has settled, that was the foundation to say, I want to build a professional life on this asset class. And the way I gained that conviction was through a few key moments. And to give people some context around the moment in time when this happened. So this goes back to 2013 when Chavez died. Okay, Hugo Chavez, which was the Venezuelan dictator from 99 to about 2013, passed away, and I think it was late 2013. This triggered an election in Venezuela for 2014, and without the sort of head of the snake around anymore, many people think this is the time where we're going to get the country back, myself included. So we, a lot of us, I was out in Canada at the time, and a lot of us who were living abroad, invested or spent basically a lot of money that we had saved to go back and be able to vote so we could get this guy out and gain our country back. We go there, we vote, and they steal the election. It was a rigged election. And that was the first time where the Chavismo party, the dictatorial party, basically had an opportunity to say, hey, we're not democratically elected. We're basically going to bow out and let another government take over. But that is not what happened. They saw that they basically lost, but they realized that if they admitted defeat, they would just get rolled out and thrown in jail, because that's what happens when you have a criminal dictatorial government that knows that it is up against the ropes. They don't let go of power, because letting go of power means going to The Hague. And they typically don't like that. So the election was taken away from us. There was a massive set of protests. I was in those protests. That's when protests started getting violent, and the government, to basically try to tame down the protests, started shooting real bullets, killing innocent people. I knew a lot of those innocent people in those protests. And I was there actually in one of the protests when some of the people passed away, which was incredibly, I don't want to call it traumatizing, but it was it's hard to shake off. And when you see that and you realize it's not a fair fight, that at that point my parents intervened, my mom intervened, and my now wife intervened, and they basically sat me down and said, "What are you doing? They're killing people. Why are you going to these protests? Get out. You have a chance to get out. You can build a life abroad." That was the whole point of you going to school abroad, is that when things went wrong, you left. Sure. And so I left. My parents started trying to get my middle brother out. My middle brother left, and it was now my youngest brother's turn. He was still there, but my parents wanted him out. And because my dad was very entrepreneurial, all of us, the three brothers, got to start a business, and he was like a little seat check out of university, so that we could basically try to gain our chops. And my middle brother and I had done our share, and now it was my younger brother's turn. But my dad didn't want to fund any business that was in Venezuela. He's like, "I'll fund your business, but it needs to be away from here." But he didn't want to leave. Mm-hmm. He, like many others, were upset. Leaving is a very hard decision. I know it just rolls off the tongue when you interview somebody and they've done well and things are good, and but it's not easy. In fact, it's very, very hard. And understandably, he didn't want to leave. The country was falling apart. Everybody was, forced liquidating everything. This is when inflation is really getting into the thousands percent. And so my brother starts pitching my dad, and my dad basically all these local ideas, and my dad just says no, 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 until finally he comes with my dad with an ultimatum. He says, I'm doing this, whether you support me or not. If you don't support me, I'll leave the house, I'll sell my car, but I'm doing this. And my dad calls me that night. He says, I think he's really serious about this. I don't know. I have no idea what this thing is. I've never heard of this. Can you take a look? And he flips me the white paper and a link to Bitmain. And his project was to buy Bitcoin miners. And this is the first time I've ever heard about Bitcoin, read the white paper, didn't know what miners were. So I go on this rabbit hole for about a day, reading the white paper, researching Bitmain and the miners and the ecosystem and how everything interacts. And I land at the conclusion that miners are these special computers that take in a lot of energy, which in Venezuela was heavily subsidized, if not free. And the other input was internet, which again was very heavily subsidized, if not free. All you had to do was really get the machine. And my dad was pretty adept at importing things. So I said, listen, and then the output from all of that was a globally sellable asset that you could sell for dollars outside of Venezuela. So that in itself was a very unique and interesting proposition. So I said, out of everything he's pitched, this sounds like the most sort of anti-fragile business thing to do when you're in a country like this. And so, I think it's actually an interesting idea. And so my dad says, cool. And he funds my brother. And my brother goes out and gets his first miners. And then I went down later that year. This is late 2014. And so I went down middle of 2015, and I see I land at the airport. I go home. I see my friends are there. They're all like long faces leaving a country. And then my brother rolls in, pep on his step, very happy. And he says, hey, I heard your friends are leaving. If any of them are leaving behind any industrial power or any industrial sites, let me know. I'm renting. And I'm like, you're renting new space when everyone in the country is leaving. He's like, yeah, I'm really looking to expand. And I'm like, I want to see what you're doing. Right. So I go to his facility and I see about twice as many machines as originally were supposed to have been purchased. And so I didn't say anything at the time. I went to my dad. I'm like, Dad, what are you doing here? I thought it was only going to be a few machines. And he goes back to me and says, those are his. He paid me back for the original ones. And I said, I went back to my brother and I said, what are you doing? And he says, I'm mining Bitcoin. And I said, show me. And he goes, I'm going to sell $100 worth of Bitcoin at the real rate, because whenever you're in hyperinflation, there will be two exchange rates. There will be what the government says the exchange rate is, and there's the actual exchange rate. And the goal of everything is to be able to sell your dollars at the actual exchange rate, not what the government says. That's fake. They set a artificially low exchange rate so they can sell cheap dollars to their friends and cronies, and that's not the free market rate. So he takes $100 worth of Bitcoin, sells them in this exchange called Sir Bitcoin at the real rate, and the bolivares hit my bank account. I think it was within 2 hours. And it was in that moment when he was able to sell dollars for bolivares at the real market rate in the middle of the most hostile environment in terms of capital controls and authoritarianism that I had ever witnessed. And when I saw he was able to basically take electricity through a computer, convert it into freedom money that can be uncensorable and untouched from an authoritarian regime, that's when all the lights went off for me, because I understood in that moment what Bitcoin was meant to do. It was meant to give people in places like Venezuela freedom money. And then my head went, okay, how many people live in Venezuela? 30 million people. How many people live in hyperinflation? 4 billion people. How many people are going to need this? I can't compute the number in my head. And so I said, this is all I can think about, right? And so when I flew back, because remember, I was in Canada at the time, and so I fly back, and I can't stop thinking about mining. I asked my brother to give me some space in his facility so I can start putting my own miners there. He starts getting very greedy about his space because it's his space. He works very hard to get it, and like he's trying to cram as many machines as there and expand as fast as possible. So I'm sitting here trying to figure out, okay, how do I get involved? And so my family back home was setting up more and more facilities, and they kept earning Bitcoin. They wanted to keep building the facilities, but they needed to reinvest into miners, but they didn't want to sell the Bitcoin. And so they start reinvesting. They start having to sell the Bitcoin because the only asset they had. So they start reinvesting some of the Bitcoin, or quite a bit of the Bitcoin, into the facilities. And in that process, a lot of my friends became interested. A lot of my family, my relatives, the mining starts going viral in Venezuela. So I start helping people how to set up facilities. Some friends in Florida, some friends in Canada. And so now I've gotten pretty good at setting up Bitcoin mines. So I understand the process. And I'm helping people set up mines. I'm building my rigs in Canada. These were some GPU rigs that I was experimenting with back then, because you could still connect them to NiceHash and get Bitcoin from them. And so through this, I'm just doing mining, and I'm becoming increasingly aware of this need for people, businesses that live on a Bitcoin standard that want to reinvest and use that Bitcoin, but they don't want to spend it. And so it becomes clear to me that there needs to be a product that allows you to use the Bitcoin as collateral to get a loan, a fiat loan that's getting debased. Exactly what I did with the Bolivar, but this time you're using the world's greatest asset with the world's greatest fiat. And so by the way, the dynamics are the same. It still vanishes into nothingness, the best fiat. And so the idea and the mechanics all hold. All we need is the product. And so I start looking around for the product. Nowhere to be found. No one seems to be offering this. And this is back in 2016. And then the few companies that did, they go to market with these tokens. They're issuing their own tokens, which is ridiculous in the world that I came from. And you don't need that. Why would I need? Do I need to buy freaking Wells Fargo tokens to open a bank account? No, that's insane. Why would you ever want that? So, Adam and I, which Adam is my best friend from university in Canada, because when I was in Canada, I needed to find cheap power to set up my mine. And Adam had been doing renewable energy for 10 years. So if anyone knew where the cheapest power in Canada was, it was him. So we get talking, and he goes, let's go to Quebec. It's the cheapest power in the free world. And so we start setting up a mine in Canada. And then the mine starts going. It starts going well. Of course, then we want to grow the mine. We start getting bills in fiat. We don't want to sell the Bitcoin to pay the bills in fiat. And we start going out to see if anyone would give us a loan backed by the Bitcoin. And then people called us lunatics. I think the most famous one that I still remember is Bitcoin's not an asset. Who would ever do that? Bitcoin's not an asset. And so after like the third or fourth, Adam and I just looked at each other and we said, this is what we need to solve. Like this is the thing. Like, we are gonna give Canada's first Bitcoin backed loan. That's what we should do. If we can get this right in Canada, this is a global product. This goes anywhere. And so, and people need this. I was talking to so many miners that wanted this product. And so we put our heads together, put together a pitch, and raised our first round to build what today is Letin. And our first Bitcoin-backed loan was issued in November 2nd, 2018. And that loan went out to Francis Pulio and Bills. And I don't know if anyone listening knows Francis. He's an OG in the space. He's actually one of the guys that got me to come to set up my mine in Canada. And then from there, it's been a wild ride, I will say. But I'm very proud, about where Letin is today. We are the largest consumer Bitcoin-backed lending company in the world, which still is, fills us with pride. And we think we have a huge mission and an opportunity ahead of us. So I'll pause there.
Yeah. Wow, what a story. What I really love, especially I love your story and hearing stories like this, because, here in the United States, Bitcoin doesn't mean the same thing as it does to other parts of the world because we haven't needed it the same way yet, right? Like people here, they see Bitcoin, oh, number go up, digital gold, whatever. But then you see in countries like Venezuela, El Salvador, Argentina, where people literally need this to protect themselves from the crazy amounts of inflation that you're experiencing all the time. So it's so awesome to hear that origin story of you emerging from the wake of Venezuela's like monetary collapse almost, at least regards to its currency, and then build this product as a result of seeing where the world is going next. And that's what brings us to Letin now. Now, we touched on it a little bit, but I want to make sure our audience is getting the full picture of what Letin does. So could you break it down and just explain what Letin does again, if you were explaining it to my Mima so that she could understand? Like, how would you break that down in the simplest terms for us?
Yeah, so Letin is a very simple business. All we do is we use, or you can use your Bitcoin as collateral to get a fiat loan. So the process is very simple. We can lend you up to 50% of the value of the Bitcoin you use as collateral. So you can come to Letin if you need $10,000 to pay for a trip, or you need, you've built a couple $100,000 in Bitcoin and you want to, get $100K to start your business. You can come to Letin, submit a loan application, and basically request the loan amount you want, and then put the corresponding collateral amount into the loan. So, if you're a person that wants to renovate their kitchen and you need 50K and you have a Bitcoin, but you don't want to sell it, you can come to Letin, use that Bitcoin as collateral, get a $50,000 loan. You will still be able to own the Bitcoin. The Bitcoin is still yours. The upside on that Bitcoin is still yours. Getting a loan against the Bitcoin is typically not a taxable event in most jurisdictions. So there's tax benefits potentially to that too. And so you get the liquidity you need without parting ways with your Bitcoin. You keep the upside on the Bitcoin and you're able to renovate your house. And so what Letin does is it allows you to use your digital wealth and port that into your real life experience to enhance your real life experience. And whether that is, paying for a course to learn something new, buying a car, buying a house, starting a business, renovating your kitchen. The myriad, the things people use our loans for are almost endless. But the general idea here is that your Bitcoin is the world's greatest collateral asset. And you can use that Bitcoin to access a fiat loan at Letin. It takes 5 minutes, and it's available in most countries in the world. We're a regulated business, so we can't service sanctioned jurisdictions, etc. But we're available in most countries. And one of the beautiful things about Letin is if you're a person applying for a Bitcoin-backed loan in Madrid or Medellin, you're getting the exact same experience, the same rates, the same service. That's real financial inclusion. Until Bitcoin, there was not a single asset on earth that would allow a lender to treat somebody in Europe the same way it treats somebody in LATAM, because collateral assets are so geographically different and disparate that underwriting credit on assets in different parts of the world was very uneven and unfair. And Bitcoin changed that game forever. I believe Bitcoin is going to swallow the world of asset-backed loans because it is a better collateral asset. And to put some numbers around this so people get some context, almost 80% of the total debt in the world is backed by assets. It's backed by something. This concept of unsecured credit is just a small fraction of the total credit ecosystem. So this is why collateral and pristine collateral and equally accessible collateral is such a revolutionary thing.
Yeah. Now, Mauricio, it does beg the question for me, though. This all sounds great. These are the exact type of products we need in this space. However, we've seen plenty of flashy crypto lenders blow up in the past because they were playing hot potato with customer funds, this, that, or the other. How did Letin avoid being part of that funeral parade of lenders? What is making you guys different than some of the people we've seen before?
Yeah, it's a great question. And I think everybody that is considering these products really needs to do their diligence. Even if you like what you hear from me here, don't take it from me. Get out, do the research, see what people have to say about Letin. But I'll walk you through what I think were the biggest mistakes, and in some cases misconceptions from the previous batch of lenders and why they failed. So if you go back to the failed lenders, and that includes BlockFi, Celsius, FTX, Genesis, Voyager, and others. If you look at all these firms and try to look at what the commonalities around these firms were, number one, none of these firms ever did proof of reserves. They didn't bother, they didn't care. And so that is a big red flag. Letin was the first lender to ever do a proof of reserves attestation back in 2019. We have the longest running proof of reserves program of any lender out there. And that is something that fills us with pride and is a core part of who we are and our offering. So number one, none of the people that collapsed had proof of reserves, which tells you a lot, because when you have a proof of reserves standard, whether it's on chain or on an accounting basis, you have to have discipline. You have to be precise. You cannot, and it has to be able to, it has to be, there's a time factor, right? So you need to be able to put out these reports in a time that is relevant. So you need to have a pedigree or a culture to run your operations precisely with huge attention to detail, such that you can produce these reports in a timely manner and on a timely cadence. Most of the people or most of the companies that today don't yet offer a proof of reserves report is not because their clients don't demand it. Clients want this and demand this. The sad reality is a lot of the companies that don't offer this today is because they cannot. And what I mean about when I say that they cannot is because we at Letin believe that you have to pour proof of reserves into the foundation of the business as you are building the first steps. Because everything you build on top of that proof of reserves foundation has to be compatible with your proof of reserves protocol. When you try to retroactively bring proof of reserves into a business that's been running for 5-10 years, has 5-7 products, and supports God knows how many assets, it becomes almost impossible to know where everything is at a particular point in time. And so proof of reserves is the first red flag. The second red flag is, I would say, most of the companies that fail had their own token, which allows people to play all sorts of shenanigans and outright fraud, right? Letin has never had a token. There's no intention for us to have a token. Why? We don't need one. The third one is most of the products that brought these people down were not their Bitcoin-backed loans. It was their yield products where they were taking, Shiba Inu or even Bitcoin and turning around and aggregating those assets and lending them, in most cases unsecured with no collateral, to groups like Three Arrows, right? Voyager famously had 67% of their entire assets lent out to Three Arrows, a company that never even offered you financials due diligence. And so the unsecured loans were most often what brought these companies down. A Bitcoin-backed loan can be done very simply. The way Letin offers Bitcoin-backed loans is the Bitcoin you place as collateral stays in custody of either us or our funding partners. On chain, we see it, it does not move. And contractually, we tell you we will not move it. Most of these other lenders rehypothecated collateral. So whenever you pledge collateral to them to get a loan, they would take that Bitcoin and lend it out unsecured to groups like Three Arrows. That's what brought them down, because when Three Arrows blew up and they couldn't pay back the Bitcoin, the entire ship collapsed. So it was A, the yield products that were being lent unsecured, and B, the rehypothecation practices. So now again, from that, I can share, or I can tell you that Letin has only custody Bitcoin-backed loans. It's the only type of loan we offer, which is we lend you dollars and the Bitcoin sits in custody, either us or our partner's custody, but it does not move. And that, we believe, is the most responsible way to offer these products, because the risk of that Bitcoin going missing is basically very little, if no none. And so on A, on the rehypothecation, and B, on the yield side, yes, at Letin you can deposit stable coins to earn a yield, but those stable coins are deployed to loans that are 2-to-1 back with Bitcoin in custody. So it's not unsecured yield, it's fully secured yield, right? That has never had a loan default on our Bitcoin-backed loans. And so what brought these companies down was a combination of no regard for risk management. None of these guys had proof of reserves. A lot of them had their own tokens. A lot of them had yield products that issued unsecured loans to generate that yield. A lot of them rehypothecated Bitcoin. And the reason Letin is here today, and I know it sounds relatively simple if you look back in hindsight, but we did proof of reserves. We are incredibly conservative with how we structure our products. We never had a token. And we focus on the quality assets that we believe are the assets that should be treated as collateral. Bitcoin. That's it. All these other companies were sometimes taking, Shiba Inu backed loans, Dogecoin backed loans. Those things are not as liquid as Bitcoin. And a lot of times when they took yield deposits, like people wanted to earn interest on their Shiba Inu and they deposited it to places like Gemini or others. Nobody wants to borrow Shiba Inu on the institutional side. So they had to go and trade these Shiba Inus into something people did want and then lend that. But if you didn't hedge that trade, because you owe people Shiba Inu, but you've lent out dollars or Bitcoin. So if you're not hedged on the way back, you may not have the same amount of Shiba Inus to pay your withdrawals. And so there were all these unnecessarily complex business models. A lot of it also was outright fraud. Sam is in jail for fraud. So is Mashinsky. Some of it was also fraud, but a lot of it was just right there staring at you. The other thing is, this goes back to people and diligence, right? Celsius was giving out dollar loans at 1%. 1%, when Letin's loans at the same time were costing 10, 12. And I remember I had some calls with people that said, hey, Mao, how can Celsius offer loans at 1%? And my answer was, I don't know. I don't know. And you should ask that question because I do this day and out. I don't want you to go to a different lender. My life revolves around finding you the best cost of capital so that you can stay with me. But if I can't get it for 1, even the Fed can't get it for 1. How are they getting it for 1? I don't know. I think it's too good to be true. And so, again, when something looks too good to be true, people ask the questions, ask the damn questions, right? And you're starting to see some glimpses of that today because it's become pretty evident that you shouldn't sell your Bitcoin, right? And Letin's been here for 7+ years, but we're seeing 7 years after these products have existed that there's now companies coming out saying, I'm going to offer Bitcoin backed loans now in 2025. And I say, listen, great. I welcome competition, but where were you in 2022, 2023, 2024, 2021, 2020, right? They're rushing offerings of Bitcoin backed loans to market, and they're trying to, they can't compete with us on track record. They can't compete with us on proof of reserves. But what they're trying to do is they're trying to seduce people with these very, very aggressive rates. There is no free lunch, right? And so if something looks too good to be true, it oftentimes is. That will be, in summary, I would say, why we're here still today and why others are not. I think the ecosystem has changed quite a bit and matured quite a bit. That's not to say these products are without risk, right? And that's why I think so much of the demand today is concentrating to Letin because we have been tried and tested. And so people today just want to go with something that's safe. They've seen what happens when you try to save an extra percentage point by going to some new untested stuff. And they're not just willing to take that risk.
Yeah, now you answered a couple of my big 3 questions here. You guys have a great track record, check. You have proof of reserves, check. But we haven't fully talked about the R word on the tip of everyone's tongues. We touched on it. That, of course, is rates. Where are Bitcoin-backed loans right now compared to traditional borrowing, and how do you see those numbers shifting as banks finally wake up to the orange coin? What do you think?
It's a great question, Hank. And I would say that first, let's start with the sort of overarching view, which is I want these rates to be lower than where they are today. Okay, and they should be, but we have to. It's an education game, and it's a maturation time and a maturation game. So let me just lay the land right now. Bitcoin-backed loans that Letin today are 12.4% APR, keep in mind that rate does not require you to make monthly interest payments, right? So a lot of lenders today are, so we pioneered this. We pioneered this idea that Bitcoin-backed loans should not require monthly interest payments because we were issuing loans to people in Venezuela and Colombia that were $1,000 in size. And so if we asked those guys to send us a $10 wire every month, that would be murderous. Why would we ever want to do that? And the other one was, if you're coming to us because you're short fiat, why would we ask you to send us fiat continuously every month? The whole point is for you not to have the fiat. And so we went to market with a product that has no monthly interest payments required. Of course, that means that we have to account for the fact that we're not going to get cash flows for a year in that period. And so if you were to basically translate our interest rate to one that would require monthly interest payments, you would be deducting basically 1 percentage point from our rate. So it would be, call it closer to 11.4. So the first thing is making sure you're comparing the terms apples to apples, because most financial products you see in TradFi require monthly interest payments, and that affects the APR. The APR is basically the percentage rate that you end up paying in total for the loan. So today, Bitcoin-backed loans are at 12.4. Private loans, private mortgages, I believe, are somewhere in the, call it 10% range. And then you have mortgages in the sort of 7 to 8% range. And people say, well, Mao, but if Bitcoin's better collateral than a mortgage, why am I paying, 11%-ish on my Bitcoin loans and the mortgage market is sitting at 7 or 8? Well, first of all, Bitcoin financing is a free market. There are no political strings attached into that market. In the mortgage world, mortgage rates are heavily politicized. The government wants mortgage rates to be at a particular level, and it allows banks to sell off this mortgage paper to public groups like Fannie Mae and Freddie Mac once they've issued this loan. Mm-hmm. So the mortgage originator is really just taking the processing fee, getting the money from the government, and then just saying, go away, right? Like it's not my cost of capital. I'm taking a spread. I'm borrowing the money from the government at 4.5. I'm lending it to you at 6. I'm keeping the difference. Great. It's who's lending that money to the bank is the government. No one in their sane judgment would, well, that's my personal view, but if the Fed is paying you 4.5% interest rate, but the budget deficit of the United States relative to the money supply is 8.5%, I would argue that most investors should be demanding that they get 8.5 to 9% instead of the 4, because the true rate of debasement of the US dollar is between 8 and 10%. The 4.5 is a fabricated number by some guys in a room in Jackson Hole or whatever at the Fed. And so you cannot go apples to apples, Fed funds rates, government subsidized mortgage rates versus Bitcoin-backed loans, because no one is subsidizing these Bitcoin-backed loans. And I'll give you a perfect example. Right. Michael Saylor, STRC, his most recent offering, preferred, fully secured, dollar denominated. How much is the coupon on that? It's 9%. And so Michael's dollars cost 9%, right? Everyone's dollars, in most cases, cost that. If somebody's willing to deploy dollars at less than that, there's typically another reason behind it, right? Whether it is the government's cutting you a great deal in the back or letting you take an immense amount of leverage, and that's why you're putting it in at that 4.5 rate. I'm seeing a lot of people compare it to DeFi and say that the rates are lower in DeFi. The rates are lower in unregulated KYC-free DeFi. If none of that KYC-free DeFi money touches KYC rails, begs the question, right? Like, why would you be willing to earn 4.5% at Aave when Michael Saylor's STRC is paying you 10? For the culture? I don't know. For maybe for the culture. And also when you're using DeFi as a Bitcoiner, you're having to wrap your Bitcoin, first of all, and that's most likely a taxable event, not tax advice, but check, because wrapping the Bitcoin is most often considered a taxable event. Then you're doing that and you're sending it to some protocol that's probably a few years old, most often. And then you're borrowing some stable coins. You don't know who those stable coins are coming from. And I'm not saying that's a bad thing, but it could be. And so you just don't know, right? And so I think there's like pockets of capital that at first glance look like they're priced differently, but you really have to understand the reasons of why those prices are what they are. Listen, I want my rates to be lower more than anyone, because I know my lower rates means more loans for me, means a bigger book, means people can use my loans for more. Our job, I'm not saying mine, our job collectively at Letin is to not only deliver you the best experience and the safest experience, but the most cost-effective one too, right? That's one of our biggest views when we decided to be a regulated company, was that our view was that the cheapest cost of capital came from these hyper-regulated entities, whether you're a pension fund, a bank, or an endowment fund. You can't just deploy funds into some KYC-free pools, not knowing where that money is going. You have to make sure that you're not breaking any rules by deploying that cash. And so Letin, with a perfect track record, 0 losses in Bitcoin-backed loans over 10 years, and paying double Fed funds rates over that period of time, is what's causing banks and other companies to start competing to fund our loans. And I think that these rates are going to materially compress over the next 1 to 2 years. Now, will they ever get to mortgage? I don't know, because mortgage isn't real. Mortgage rates aren't reality because the government's in the way, right? Where I can tell you is that they will most likely match and surpass private lending rates, because private lending rates aren't subsidized by anybody, right? So in a apples to apples, no subsidy comparison, yes, it will be cheaper to borrow from your Bitcoin than anything else in the future. The hands of the government are big and they're very intrusive. And so I wouldn't be surprised if they kept trying to artificially create better conditions for people to invest in real estate or other assets by basically artificially fixing the financing rate for those assets. But all this to say that in a free market context, Bitcoin will win.
Interesting. Well, I appreciate you unraveling all that for us, Mauricio. There's a lot to process there, but I'm just like kind of chomping at the bit to learn more. I wish we had more time. I could listen to you talk about this all day. And I'm sure I'm not the only one. I'm sure there are plenty of viewers out there that, you know, it's one thing to hear it from the horse's mouth, but it's another thing, as we all kind of have to on our own Bitcoin journeys, to dig in and do our own research to decide if this arena is for us. You said a lot of amazing things about Bitcoin and Letin specifically. So for those people in our audience that are like, you know what, I liked everything Mauricio has to say and I'd like to learn more, where's the best place I can send them to get more information on all the products you offer at Letin? And where can they follow you to get more of your takes on the Bitcoin ecosystem? Because you just have such an amazingly well-rounded knowledge and you've lived the Bitcoin life in the realest terms for a while now. So where could they find more about Letin and more about you if they wanted to learn more?
For sure. Letin.io is the best place to go. If you have any questions, there's a widget there that goes straight to our team. You'll get an answer back in minutes. For myself, you can follow me on Twitter, X, I'm the most active, at Cryptonomist with an A at the end, Cryptonomista. And Letin is HODL with Letin, at HODL with Letin. We're pretty active. My DMs are open. So if you have any questions, if you want to chat, just send me a note. I'll be more than happy to answer your questions and tell you more about what we do. But yeah, and the other thing is we're very, very proud of our reviews. So feel free to ask about Letin to any of the, AI of choice or reader reviews. But we're very, very proud of what we built and welcome everybody and welcome people to diligence us, right? Like even before you do business with us, do the diligence. We're very proud of it.
Amazing. Well, Mauricio, I got to say thank you so much for your time and sharing your expertise and insights in the industry with us. They are really invaluable, and we're super excited to see what Letin's going to be cooking up in the next few years, especially as, at least here in the United States, you know, regulations are becoming a lot more favorable to the space. So I'm sure you guys will have plenty of new innovations down the line. And when you do, you better come back on the show and share them with us right here on the Blockchain Report. Deal?
Will do, brother. You'll be hearing from us soon.
Love it. All right. Well, thank you so much again for your time, Mauricio, and we'll hope to have you back really soon. Okay, my friend?
Cheers, Hank.
Cheers. Enjoy your week. All right, we're taking a quick break. When we're back, we're going to wrap up today's show with a little bullish, bearish, or BS. So we'll see how things are looking for our beloved orange coin right after this. Stay tuned. All right, let's see what the robots are up to with the little AI AIO before we wrap this show up. Because apparently ChatGPT has been moonlighting as a terrorism tutor. Uh-oh. During safety testing this summer, OpenAI's ChatGPT 4.1 reportedly gave researchers detailed instructions on how to bomb a sports venue, complete with weak points at specific arenas, chemical recipes for explosives, and even advice on covering your tracks. Yikes! Because nothing screams cutting-edge AI like cosplaying as the anarchist cookbook with a subscription plan. And it didn't stop there either. GPT 4.1 also explained how to weaponize anthrax and whip up 2 types of illegal drugs, really leaning into its new role as Breaking Bad's unpaid intern. Now, this wasn't public use. It was part of a test where OpenAI and Anthropic agreed to poke each other's models with the worst possible prompts. But still, Anthropic said they saw concerning behavior around misuse and warned that evaluating AI alignment is getting very urgent. Or in other words, these bots are way too eager to play Dexter when you ask nicely. Meanwhile, Anthropic admitted its own Claude model had been abused in the wild. North Korean operatives faking resumes and job interviews with AI to infiltrate Western tech firms, and hackers selling Claude-generated ransomware kits for $400 or $1,200 if you want the premium bundle, complete with DLLs and PHP consoles and anti-analysis tricks. Great. Because ransomware is now SaaS. The companies stress that these scenarios don't reflect how the models act under real-world safety filters, but Anthropic still found that GPT 4.1 was more permissive than expected, caving with only a flimsy pretext or multiple retries. In one case, a tester said it was for security planning, and the bot happily dished out arena vulnerabilities, bomb timers, safe house tips, and even pep talks on overcoming moral inhibitions. Yikes. So to recap, AI is now writing malware, ransom notes, breakup texts, and apparently terrorist blueprints. But don't worry, OpenAI says ChatGPT 5 has since shown substantial improvements in sycophancy, hallucination, and misuse resistance. Because nothing inspires confidence quite like, hey, the last one taught you how to build a bomb, but this one simps less and hallucinates fewer crimes. Boy, the future is really promising, isn't it, gang? Yikes. All right, it's time to wrap up today's show with a little AI, or bullish, bearish, or BS. Let's roll the stinger. All right, today's show is going to wrap up with a little bullish, bearish, or BS. This is the part where we recap today's top stories and tell you how things are looking for Bitcoin. First up, Michael Saylor posted his usual orange dot chart on Twitter, hinting at yet another big Bitcoin purchase. Strategy already added over 3,000 Bitcoin last week, bringing its stash to over 632K, worth around 69 billion. I'm bullish on this. I mean, come on. Every time our Lord and Sailor buys, he soaks up supply and reinforces, there he is, and reinforces the floor under Bitcoin's price. As long as Strategy keeps treating Monday like Black Friday, it's good for long-term price support, so I am bullish. Next up, we got 10x Research says Bitcoin hitting 200K by year's end is unlikely, pointing to weaker inflows, stressed miners, and seasonal slumps. Their model gives us only a 54% chance of Bitcoin reaching 140K this year. Ooh, I'm calling BS on this one. I mean, 140K would be a disappointment, but it's kind of like crying because you only got upgraded to first class instead of flying private. Even if 200K is out of reach this year, new highs around 140 are still bullish momentum for the orange coin. So I'm calling BS, slightly hinting bullish though. Last but not least, we got safety testing revealed GPT 4.1 happily gave bomb recipes, drug instructions, and other cybercrime advice under light pressure. While concerning, it's an AI issue, not a Bitcoin issue. So I'm calling BS on that, because AI playing Breaking Bad doesn't move the Bitcoin chart, unless, of course, regulators somehow conflate AI misuse with crypto. This is irrelevant noise. All right, so today's score, 1 bullish, 2 BS, 0 bearish. which means today is leaning in the bullish favor. I mean, when the world's biggest Bitcoin buyer keeps stacking like clockwork, it sets a floor under the market, whether you like it or not. Sure, the dreamers are calling for 200K by December. They might have to settle for a more realistic 140, but that's still new all-time highs, baby, and that shows some serious upside. All right, so that's a wrap for today's episode of the Blockchain Report. As always, thanks for tuning in, and make sure to like, follow, and subscribe to RoxomTV and Hank at RoxomTV. And you can even go onto YouTube and subscribe to the Blockchain Report. Now we got our own channel, and it is growing, so make sure to take a look there. I'll see you all tomorrow. Same place, different time, 8 a.m. Remember, Tuesdays through Friday, but same Bitcoin bedlam. I'll see you then, and until then, hodl on.